And actually, doing the right thing at the right time means we were printing the Euro stocks at the top, and we were literally the top tick when we were short that day. Yep. And then putting further shorts on when we were told that the market was going down and collapsing. And we actually came out of that day surviving and just about making some money when we were down massive.
Yeah.
Now, what's interesting about it as well is in the context, if you remember, we were on the Goldman Sachs trading floor.
Yep.
I think it was about 24, 25 traders on the desk.
Yep.
And surrounding you on the trading floor, there's like 200 to 250 people.
Yep.
And every single person can see all the positions of the traders
Yep.
and all the P&L of every trader. And in scenarios like that, the trading floor goes quiet for the whole afternoon. And you're literally in the goldfish bowl. And when you think about it like that, you can really panic and really start to make really very stupid decisions, because your whole career can rest on the next several decisions that afternoon. So the training of emotional detachment, obviously in that environment, is insanely intense, right?
Very much so.
So we've been very at the sharp end.
Yeah.
Retail traders sitting at home, there's no boss looking over their shoulder.
No.
There's no one telling them what you're doing is incorrect.
Absolutely.
So emotional detachment is probably more difficult for a retail trader sitting at home by themselves. Would you agree with that?
I would agree completely. I think being a retail trader sitting at home by themselves could be quite a lonely life. I think this is one of the real subtle positives about the mentorship program, is that it's not only the scheduled mentorship calls, but it's also the contact. Because I've been in situations, I'm sure all traders have been, where you question your own judgment.
Yeah.
And it's always good to have a sort of little sounding board. Am I completely crazy to think about this? Or have you looked at this, or you thought about that? Just to sort of have a bit of a reality check. But the emotional detachment is absolutely key. And this is where we stress the stop losses. You need to be disciplined about stop losses. And also, as you alluded to, that we increased our shorts when they were starting to work. Again, the detachment from, if you start a position and it's moved against you, don't increase it. Only increase positions when they are working, which may sound counterintuitive, but that is the emotional detachment that you need. Don't fall in love with the position and trade it correctly. So
I guess the basic premise here is there's obviously a lot more to trading than just this, but having the emotional detachment to add to winners when they're working.
Absolutely, add to winners.
And have absolutely no emotion to cut losers.
Nope. Adding to winners, cutting losers is exactly the same process. All you're doing is risk managing, and you're putting the risk reward in your favor. That's what we're trying to get. That's what we're trying to get the mentees. That's what we're trying to get the retail traders from the institute. That's what we're trying to get them to do. So at all times, you want to get the risk reward in your favor, and that may be increasing risk at the right time, but also reducing risk at the right time.
So in terms of that, in terms of risk management, that's all great. But you can be an amazing risk manager.
Yep.
But let's be brutally honest here.
Yeah.
If your ideas are crap,
yep,
you're going to have to end up being the greatest risk manager of all time, because your ideas are just awful, right? So ideas play a massive part as well.
Absolutely crucial. I think the idea generation and the risk management are as equally as important as each other. It's absolutely essential to be able to generate your own ideas, and it's also absolutely essential to risk manage those ideas correctly. You need both. You can't do one without the other.
So how, in terms of ideas, how do you, and obviously I have a rough idea, but in terms of some details, how do you take someone on a journey over a number of weeks, months, and teach them how to start generating their own ideas?
Well, the easiest idea generation that I think is, we're looking at the leading indicators in the US market. We have the same indicators in Europe, but the US is just, you've got high quality information with a very, very broad equity market, and you have got consistent information, which is we can rely on. You have the same information in Europe, but not the same breadth of the equity market. So the US is the easiest place to generate ideas. Not only to generate ideas, but also you have the wherewithal to implement those ideas. We're looking at the lead indicators, because the equity market as itself is a lead indicator, but it's typically anywhere from between 1 and 6 months ahead of the economy. So we want to be ahead of where the equity market is, ahead of the economy, and we're looking where the trends are. we talked about 1 to 3 month or 3 to 6 month trades. The easiest way to make money is to identify the trend and write it. And we do that by looking at lead indicators. Look at the sectors, we drill down within the sectors where the growth is, where the slowdown is, and we generate the appropriate sectors to be long and short, and then we do some stock selection within that. I have my tools which I use, which I communicate to the mentees, encourage them to look at their own things as well. And then I have my own technical analysis that I use. Again, it's non-exhaustive. And one thing about technical analysis is, as you're very well aware of, we use technical analysis only to time the entry into our trades. We don't look to generate trades from technical analysis, only to generate the entry points. Again, like I said, we're trying to get the risk reward as much in your favor to time the entry into the positions. Once that's done, that's the idea generation part. And this is where, again, go back to patience. You can generate a fantastic set of ideas. However, if the timing doesn't look right here, right now, be patient, sit on your hands and wait for the timing to be right. The timing will come right. You may have to be patient, and it may take longer than you think. I have put numerous trades on, boredom trades, we call them, where nothing's going on, you're trying to force something, you end up losing money, cut the position, and you think, what an idiot. All you've done is just written a check to the market. This goes back to the patience. This is what I've learned, this is what you've learned, and this is something that we try and instill in the mentees and via the Institute. Absolutely key. Do not do any boredom trades. It will cost you money and you'll feel like a muppet.